Hello friends, welcome to CEC Live Lectures. Dear friends, today in this session we are going to touch on one of the important topics under our series Financial Accounting. We are going to talk on ledger posting. We are going to discuss what ledger posting is, as well as we'll be discussing in detail rules of ledger posting, whereas we'll try to discuss more and more on the practices of, that is the practical aspects of ledger posting. And for this discussion on ledger posting, we have with us in our studios Dr. Amarjeet Kaur. Dr. Amarjeet Kaur is a professor of accounting and she is teaching in one of the leading institutions in the country. She has an immense experience and her academic career contributed a lot in she has contributed a lot in her academic career, and she is a certified management accountant from USA, authored numerous books, as well as number of her articles have been published in reputed journals too. Friends, if you want to ask questions from Dr. Amarjeet Kaur on today's topic, then do call us through our toll-free number. Our number is 1800-110-430. I repeat, our number is 1800-110-430. Now, I would like to welcome our guest, Dr. Amarjeet Kaur, once again and request her to explain us in detail what ledger posting is. Hello, ma'am. Welcome to the lecture.
Hello, Kritika. Good morning, viewers, and welcome on another lecture in financial accounting. As has been introduced, the topic is ledger posting. Let me, build the background for you so that you are able to comprehend the matter or material well. So, when we begin with this topic, we discuss that financial accounting is all about, recording, then analyzing, summarizing financial transactions. So, we record it, we classify it, we summarize it, and then we analyze and interpret the financial transactions happening in a particular business. So this is what financial accounting is. So if you look at the, this common generic definition of financial accounting, there are a couple of functions actually embedded in the definition itself. The first thing as we came across is that is financial accounting is recording of business transactions. So we have already covered the recording function of financial accounting in the last few lectures. And the second thing is it says classifying. So second function of accounting is classification of business transactions. And that's where the ledger posting comes in. So basically, I am addressing the second function of financial accounting, which is classification, and pertaining to that, this discussion on ledger posting is going to be relevant. Now, what is ledger? What is ledger posting? These are the two important questions in hand. If you recall the discussion of previous lectures in this regard, we said we start with analyzing business transactions and then we record them in the book journal, right? So journal is the primary book, the book of prime entry, where we record the transactions for the first time in the books of accounts. Barring memorandum, of course, memorandum book is always there in most of the businesses. Of course, we do a basic business transaction, transaction analysis, certainly that is there. But the first formal recording of transaction takes place in journal book, which we are through now. The second function, the second action in the process of accounting is basically classification. Now, you will come across books which may say it as a third step, and you may come across books which may say classification as second step in the accounting process. I would recommend you to recall it, to remember it, to take it as the third step, because I certainly give a due importance to the analyzing part. So the step 1 becomes analyzing of business transaction. Step 2 is generalizing, recording of business transaction, and the step 3 is classification of business transactions, right? So where do we do this classification? This classification of business transaction is done in the book name ledger, Ledger, right? So this is what the ledger is. So ledger is basically a book where we do the posting of transactions, business transactions, or we open up accounts pertaining to different transactions recorded in the journal book. So, I may say this ledger is a set of accounts. Set of accounts means it may have multiple accounts, numerous accounts depending upon the size of the business. So, number of accounts in a ledger book would vary from business to business. One business may have 100 accounts pertaining to debtors, 200 accounts pertaining to creditors. Other business may have only 2 and 10, right? Because they do not deal in credit. It all depends. One business may have a very big cash account because it has 100 and 100 of transactions in cash. The other business may have hardly any transaction is in cash. So it all depends what what is the nature of the business, what are the practices of the business as a matter of principles, right? So I would say the ledger is a book where we post transactions from, or we transfer transactions from journal book to this ledger book. So what is posting? Posting is basically transferring transactions from the book journal and putting them in the accounts in ledger book. So this act of transferring from one book to another book, that is journal to ledger, is known as posting, right? So this is what the ledger book and the posting is. Now you can have a look at this slide and you will get to know that how this flow is happening. We have transactions, right? Transactions are indicated on the extreme left on your side on the screen. So we have certain business transactions. Of course, they are supported by document, source document. So we have to have source document, that is where we analyze transaction, that is the step 1. So once we find out a document for a transaction, a business transaction, then we record it in the book journal, which we did in the last 2 lectures. So this was the format of journal where date is there, description and debit and credit, 4 major column is there. Other than that, there could be the 5th column of ledger folio, which is not indicated here. And then it is the transaction would flow to the next book, which is known as ledger, and we would be doing posting here. So ledger is, as I said, a set of accounts. So it would have numerous accounts, and at the top we would have the name of the account. So that's why it is written account name. And then account has 2 sides, debit and credit. The left side of the account, this is a T-shaped account. So a letter T, a capital letter of English alphabets is there, an uppercase T. So left hand side is known debit, the right hand side is known as credit. So this is how there is a flow of transactions from journal book to ledger book, right? So you can have a look at this slide which says why do we do the posting part. It says journal lists each transaction in chronological order. So this is there, we know. It can be quite difficult to use the journal to determine the balance in any specific account. So that is why the step 3 in accounting cycle is to post in a ledger. So using journal ledger helps keep track of balances of specific account. Let's discuss this thing. What does it mean? As you know, we have done recording in the journal book in the last 2 lectures. And in the recording, I specified many times that we do recording in chronological order. It means as per the time, as per the order of happening of the transaction, as it occurs, we record. So we have one transaction could happen pertaining to cash in the month of January 1st day. Second may happen on the 30th day because company doesn't deal much in cash. Right? The third transaction may happen next month, February mid, 3rd, 4th, like that. So there's a possibility that transactions are happening in a distinct manner. They are happening or they are occurring with a time gap, time lead is there. So cash may not be the good example to take. You can take something like purchase of furniture. We hardly purchase furniture every year. It's not quite possible that we are purchasing fixed assets very often. That is not quite easy and true. So such transactions would be recorded, and there would be a good time lag, and we are recording transactions in the book journal based on the date in chronological order, right? So it would not be easy for us to find out the balance in the account pertaining to a particular type of account, whether this is an asset account or a liability account or a capital account or expense or revenue account. These are 5 elements which are important in the financial statements. I keep on emphasizing on these 5 elements all through the time. So the point I am making is this, that it may not be possible for us to have to know the balance of accounts which we opened in the book journal. So the question is, what do we do in that case? That is where the ledger book comes for our rescue. We classify, as I said, in the ledger book we classify. What do we classify? We classify all the transactions which pertain to a particular type of or particular account. Say for example, if I have opened up an account with the name of Manish, so the Manish account, I may have dealt 10 times with Mr. Manish during my financial year, right? And all those 10 transactions may not have happened frequently. There could be a good time lag between these 10 transactions. So the moment I make Manish account in my ledger book, I would be able to know the summary of the account. I would be able to balance the account to know either I have a debit balance or a credit balance depending upon Manish is debtor or a creditor. So this is how we can have balance of a particular account. We can actually know the summary of classified items. So this is a very good and important step number 3 in accounting process, that we open accounts in the book named ledger, and this process is known posting, right? So this basically helps us to seek classified information, to seek idea about a particular type of account or particular account itself in different types of account. We know we have nominal accounts, we know we have real accounts, we know we have personal account, but there are the 3 types only, 3 classes of accounts, right? We may have 100 and 1000 of accounts in each category of types of accounts. We have 3 categories, nominal. So I may have 100 accounts in nominal accounts category. I may have 200 accounts in real accounts category. I may have 500 accounts in personal account category, right? So we would have individual account of each individual which is actually personal account with whom we have dealt it, irrespective we have given something or we have received something. They all come under the personal category. So this is what is done in the book ledger, basically classification and to seek classified information pertaining to each account opened in the journal book. Okay, so now let's talk about method of posting. So method of posting, have a look at the slide. It says posting of all the debit first and then credits. This is one option, one choice. We have hundreds of transactions and we have the choice to record or to post all debits first and then all credits. So if I have, say for example, if I have 200 transactions recorded in the journal book, so how many debits and credits are possible? If I take a simple straight example, there are going to be 200 debits and 200 credits. So there would be total 400 sides, because every transaction would have equivalent amount of credit. So assuming it's a straight simple example, so where I have 200 single entries, not composite or compound entries, that will change the number. So I would have 200 transactions on debit side and 200 transactions on credit side. So in the first method, the first possibility in posting is this, that you have to transmit from the journal book to ledger book, right? So you transpose or you transmit all debits first, followed by all credits. This is one choice. I am not saying you do this. I would recommend what should be done later, but I am just discussing all the available possibilities. So one possibility is that you take all the debits first, 200 debits, post them in the ledger book, and then go to credits. Then begin with the first credit and complete all the 200 credits, right? Second possibility is that all debit and credits pertaining to one particular account. So I am referring to the second now. All debits and credit, my cursor is there, it's indicating relating to any particular account. So what does it mean? Let's discuss. It means if I have say cash account. So cash account is one particular account, right? I may have 20 debits, 10 credits based on my size of the business, all pertaining to cash. Another business may have 400 debits and 300 credits, pertaining to cash only. So as per the second option, you have the choice to take all the debits and all the credits pertaining to cash. And you can do the same thing with other individual accounts. Say if you have building account and there are 5 debits, 4 credits. So complete all the transactions posting pertaining to building account. So this would be a second way. Say you have somebody named Vinod. So we have an account of Vinod in our books of account, and we have 10 debits and 10 credits. So you can actually complete posting for all the debits and credits which you dealt it with Mr. Vinod this year, right? So this is the second possibility. So here we are emphasizing on a particular account. I hope you are able to gather. In the first method, available method, we are completing all the debits first and pertaining to either building or Vinod or cash or debtor or creditor or furniture or land. And then we are going to all credits pertaining to X and Y and Z. So there is a big difference between two of the methods. So these are the two methods. The third method, which is quite popular method, which is practiced in the most of the books actually, and I would also recommend you to practice that only, is that you complete one journal entry for posting purpose. What does it mean? Say you purchased land by paying cash. So what would be the journal entry? Land is a real thing. It's coming in the business. So you would say land debit and cash credit, because cash is a real thing, is going out of the business. Debit what comes in, credit what goes out. So you would be saying land debit and cash credit, right? So as for the third method, the recommendation is that you complete both the side, debit as well as credit, of one particular type of one particular transaction, one particular entry. So this entry, say for example, was having two parts, two sides. Debit is land account and credit is your cash account. So you open land account first and then you open cash account, and then you go to the second transaction. Second transaction may have furniture and receivables, right? Payables. It could be anything. You purchased furniture or you sold furniture based on that. Third transaction could have salaries and bank. You paid by check. So you open up, you complete one transaction. You actually post both sides of one journal entry, and then you go to the next journal entry, and then the third, then the fourth, and keep on going like that. So this is the third way and the most recommended way, especially for the purpose of students. Otherwise we have softwares, we have Tally, we have QuickBooks and many more such softwares. They are simple and which are practiced by most of the small business houses. Big business houses have different softwares. So in case we are keeping a manual record, and in case otherwise we are students and we are practicing for the sake of examination, this third method where we complete one journal entry and then we switch over to the second one and keep on going further is the most recommended method, right? So other than that, just have a look at the slide. The fourth point in the slide says the ledger folio column of the journal will be filled at the time of posting in the ledger. So this is another important point to be kept in mind. You remember we opened up one column ledger folio in the book journal, not in the book ledger, right? So this particular ledger folio column in the book journal would be filled when you are doing posting. What does it mean? It means the ledger has couple of pages, of course, the size may vary, and each page has been numbered 1, 2, 3, 4, 5 and so on. So if I am recording land purchase on in the journal book, I am recording it and then I am posting it on the page number 4 of my ledger. So page number 4 would be written in the ledger folio column of the journal book. And if my purchase entry of land was on page number 200 of my journal book, in my ledger book, I would be giving the reference of journal folio of page number 200. So what is the purpose of doing that exercise? So if you analyze it carefully, we are doing it for the purpose of cross reference. We want to refer to the transactions for the purpose of verification. Anytime auditors may need to verify if there's something if our books of accounts are not matching at the end of the day, if there's some question raised or some finger raised by auditors, we should be able to verify, because journal has narrations, right? I hope you remember. Whereas ledger is a summary of accounts, all transactions are summarized so that we could have balance known to us for a particular type of account. So this exercise of having ledger folio and journal folio page being filled at the time of posting helps us in internal control, helps us in auditing, and otherwise it really, to some extent, it helps us in preventing frauds as well. So this is a good internal control system, internal control practice basically, to have ledger folio column being filled in the journal book at the time of posting. I hope you were able to gather this point. Now let's move further and discuss the very important part of ledger posting, that is rules of ledger posting. So what are the rules? The rules are very good. The slide is in front of you. It says, first of all, we should be having separate account should be opened for posting transactions relating to different accounts opened in the journal. So what does it mean? It means if I have opened an account, if I have recorded, say, sold to Ram, Ram name is there in my journal, purchased from Vinod, purchased for Anurit, purchased from Ayan. So if there are 4, 5, 6 names there in my journal book, I need to have very much same name in my ledger book, and we cannot have even different spelling. There are a couple of names in India which have different spellings. Even for my own name, for example, it could be AMARJEET, and I have seen people with this, whose name is pronounced as Amarjit, but it could be AMARJIT, right? So point I am making it out is this: we need to have the same spelling even in the book ledger when we open account. So whatever the name or the spelling we used in our journal book, we should be opening up an account in the ledger book with the same alphabets, with the same spelling. This is the first thing. So number of accounts would depend upon the number of different accounts we referred in the journal book. So separate account, this is the first rule. So which doesn't mean is that, if I have dealt it 20 times with Vinod, all the 20 transactions would be in his account here in the ledger book. Whereas those 20 transactions may have happened on different dates, would have been recorded on different pages in my journal, right? But in ledger, all those 20 transactions pertaining to one person Vinod would be recorded together in one account itself. If there are two different Vinods, we have to have differentiation, right? There's a possibility that I dealt it with two different Vinods with the same spelling even. Then I need to differentiate, or I need to be careful in recording, because we need to record transactions pertaining to the person we actually dealt it with, right? Or the transaction belonged to. This is the first rule. The second is whatever, so kindly pay attention. Now I am sharing out the most important part of posting. This will help us to understand practical part very easily and carefully. So whatever has been debited in the journal book would be debited in the ledger book as well, but the reference would be of the credit side. I would repeat, whatever has been debited in the journal book would be debited in the ledger book as well, but we would give the reference while writing in the description part or detail part of the opposite side, which would be credit here, right? This is the second rule. Third is, whatever has been credited in the journal book would be credited, but reference would be given of debit side. It means opposite side. So this is these are the three important rules. Just to summarize: 1, open the account with the same name which you have in the journal book. 2, debit the account you debited in the journal book but give the reference of credit side. 3rd, credit the account you opened in the you credited in the journal book but give the reference of debit side. You will get to learn about this more in the second half when we will do the practical questions. Thank you very much for being with me for these 30 minutes. Thank you.
With this note, thank you, ma'am. Thank you so very much for giving us a productive session. And friends, believe that the lecture might have appeared very, very beneficial to you. So be with us as we are going to give you more and more information. We'll be back after a short break. Hello friends, welcome back to this session. And friends, as you know that in our previous session we discussed on the rules of ledger posting. As discussed earlier that we would be talking on the practical aspect, that is how to deal with the ledger posting. We will be giving you an insightful lecture too. So friends, here we are. Now we are going to talk on practical aspect of ledger posting, and for this discussion we have with us in our studios Dr. Amarjeet Kaur. Friends, if you want to ask questions from Dr. Amarjeet Kaur on today's topic, then do call us through our toll-free number. Our number is 1800110430. Now I would like to request Dr. Amarjeet Kaur to give us more insight into today's lecture. Hello ma'am, welcome to the lecture.
Hello Ritika. Welcome back viewers. This is the second part of the lecture. We are talking on ledger posting. As Kritika introduced, we would be talking about practical aspects of ledger posting, or in fact we would be practicing questions in ledger posting. So to understand the practical questions or practical aspect, it's important that you remember the rules we discussed in the last half. So those rules are going to help you to practice questions in posting. So let's recall those rules. Open the account with the same name. Debit whatever you have debited, but give the reference of credit side, and credit whatever you have credited, but give the reference of debit side. So this is simple, not very difficult. So to begin with, let's have a look at the format of an account. So this is how an account would look like. So here is the slide. I need I need some intervention. This PC, the system is probably not working. We have to show slides and would request some intervention here. The system is not working here, and we have all the questions on the. Meantime, let's have a discussion that how the practical parts would be taken. I am taking some example by the time this system is made function for me. So let's take one question that somebody named Ram started business with investing 10,000 in the business.
Sorry to interrupt you over here, ma'am. We believe that most of our friends would be having lots of questions, questions regarding the ledger posting. So, friends, we would like to tell you all that if you want to ask questions on today's topic from Dr. Amarjeet Kaur on today's topic, then you can call us through our toll-free number. Our toll-free number is 1-800-110-430. I repeat, our number is 1-800-110-430. Dear friends, as well as if you are not able to contact us through our toll-free number, you have another option. You can post your questions to us at info.cec@nic.in. This is the ID where you can post your questions. We'll try to take your questions today only, but if we'll not be able to take questions today, we'll try to give answers to your questions the next time when Dr. Amarjeet Kaur visits our studio. So dear friends, we would like to tell you all that in our special series, that is financial accounting, so far we have conducted numerous sessions, and a number of sessions which have been conducted so far are uploaded for you on YouTube, because we are in regular practice of uploading these lectures on YouTube, because we believe that whatever you learn through the live transmission, you have an option to see the lectures the number of times you wanted through our YouTube channel. For logging on our YouTube channel, you need to log on www.youtube.com/CEC-UGC. This is our YouTube channel where you can see the lectures pertaining to the series Financial Accounting. I repeat, our YouTube channel. For logging to our YouTube channel, our ID is www.youtube.com/CEC-UGC. So we are discussing more and more on ledger posting today.
Thank you, Geetika. I think I can take some examples orally. Meantime, the system start working. So I was saying, let's take an example that Mr. Ram has started business by investing 10,000. So let's analyze this transaction, the step 1, and then let's generalize it and then think how to post it. So if Mr. Ram has started business with an investment of 10,000, so 10,000 is coming up in the business, right? So what would be the transaction? And for the purpose of recording, it would be cash, that debit what comes in, credit what goes out, right? So cash is coming in the business. So we will debit cash 10,000. And what would we credit? Because once we are sure about one aspect of debit or credit, what is the second part remaining? That is credit here. It would be capital, because Ram is owner of the business. He brought in capital in the business. So you have the choice to write either Ram's capital account credited or only capital account. You cannot write Ram. We differentiate owners from other individuals. We may have the owner's name Ram and we have some debtor or creditor name Ram. So Ram's capital becomes representative personal account here. So the recording would be cash debited and capital credited, right? So this is the recording part. Now question is how to post it, because we are doing the posting part. So as I said, the rule we should follow is complete one entry for posting and then go to the second entry. So let's complete this entry which we assumed, we took as an example. So I shall be opening up Ram's account first, and the second rule is, so Ram's account should not be the Ram's account, it should be Ram's capital account or it should be capital account. So first of all, the first step is to be sure about title of the account. Okay, so we opened capital account, let's say. Then the second thing is what is to be debited. The transaction was cash debited to Ram's capital account or capital account. It means capital account has to be credited, because in your journal entry you said we recorded cash to capital, right? So it means the capital account would be credited. Okay, now this is the second step in the posting process. What is the third thing? Third thing is we are sure that I have to put this 10,000 in the credit side of my capital account. But the third thing and the important thing is I need to know what should be the reference. And if you recall my discussion just few minutes ago, I said we should be referring to the opposite side. And what was the opposite side? Debit side, because capital has been credited and I am posting in the capital account. So the opposite side is debit, right? And what was on the debit side was cash. So it means I would be recording this cash in the description column of my account. I will show you the shape of account. I will show you this exactly how this posting would be done within a minute or so. But this discussion would have certainly helped you that how we actually apply the rule of posting. So number one, we did what was, we opened the capital account, and then in the credit side of capital account we put the amount and then we gave the reference of cash. Okay. Now what is the second account left for posting? This is cash account. So we need to open up cash account, right? And now in this case what would be, cash was debited. So we would be, the title of the account would be cash account, and cash account, this amount of 10,000 would be written on the debit side of cash account, but the reference needed to be of opposite side, and opposite side is credit, and in the credit side we have capital account. So it means in the cash account I would be writing the amount 10,000 on the debit side, whereas I would be giving the reference of capital account. So this is how we completed this one transaction with the help of example. Yeah, so
we believe that
I hope Geetika wants to say something. Yes, please.
Yes, we believe that all the students who are watching this lecture are benefited with the examples given by Dr. Amarjeet Kaur. And friends, we will be giving you more such kind of examples so that it becomes easier for you to understand ledger posting. And as we discussed in detail about what ledger posting is and what are the rules of ledger posting, and also we promised to you that we will be dealing with the practical aspects of ledger posting. So here we are, and as Dr. Amarjeet Kaur has explained ledger posting with the help of one example, we believe that the remaining examples are here for you. So now I would like to request Dr. Amarjeet Kaur to give more examples to our students, so the practical aspect is dealt very easily.
Sure, Geetika, thank you very much. So here's an example. Kindly have a look at the slide, that how does an account look like. So have a look at this slide. So as I said, we should be careful about the title of the account. So I purposefully wrote this word title of the account, which is on the top of the account, in the middle of the account. Then we have this T shape of account. On the left side, which is known as debit side, and the right hand side is known as credit side. So this is what we do. Okay, so after this we take some example. So the example I was taking is the same is here, that Ram started business with a capital of 10,000. Okay, so now I am showing you this account opened in the ledger book. So here is cash account first. So the title of the account would be cash account, because what was recording? The recording is cash account debit to capital account. Kindly follow my cursor. This will help you to comprehend the discussion. So cash has been debited 10,000. Capital has been credited 10,000. Okay. So cash account has been debited by 10,000, and since we are preparing this cash account, so my reference would be of the, and we are putting this amount on the debit side, the reference would be of opposite side, which is credit side. So in the transaction, have a look, the capital account has been credited, right? So capital account has been put here. Okay, so this transaction has been completed partially for cash side. Now the second account which we should be opening is capital account, right? So the capital account, as I said, we would be crediting this amount, credit whatever has been credited. So the cash 10,000 was credited, would be credited, but in the capital account, but so capital was credited in the journal book. So we are crediting in the ledger as well, but important is this particular or description. So in the particulars or in the description, we should be writing the amount, that account which was debited, which was cross-referred. So cash was debited. So it is always opposite. So we would be credited the account which has been credited, and the reference would be of the debit side, and in the debit side we have cash account. Okay, so this is how we completed one transaction. So let's go to the second transaction. Second transaction says he purchased furniture for cash of rupees 4,000. So this is the number 2 transaction, right? He purchased, he means Ram, purchased furniture. So how would we record? So let's see the generalizing here. The second transaction would be recorded like this: furniture account debited to cash account, right? So cash account would be credited for 4,000. So it means if I follow the discussion on posting, I should be opening up furniture account. I do not have furniture account open in my ledger book. So I need to open account with the same name, which should be furniture account, and cash account is already there. So I need not to open a second cash account. This is another lesson here. We never would have same name for more than one account. So we need not to have cash account separately. We would be recording cash transaction of 4,000 in the previously opened cash account. So here furniture account would be open. Let's have a look how it would be posted in the ledger. So we would have furniture account. The title would be furniture account. The amount, because furniture was debited, so furniture account debit to cash. So 4,000 account, because furniture was debited. So this 4,000 would be put on the debit side of the furniture. This is the debit side, left side. And the reference would be of the opposite side. So what was the opposite side? Cash. We said furniture to cash. This is how our journal entry was, right? So we did cash on the credit side. That's why in the reference, in the description, or you may say in the particulars, we have cash account. So furniture account has been debited by following the rule: debit whatever has been debited in the journal book and give the reference of the opposite side. Here the opposite side was cash. Alright. So now cash was credited. So it means I need to put this cash of 4,000 in the cash account as well. So let's go back to the cash account here. So cash account, the rule says credit whatever has been credited. So we purchased furniture and we credited cash for 4,000. It means the cash account would be credited. Okay, so it is credited, but the reference would be of furniture. So in the cash account, we cannot have reference of cash for sure. In the cash account, we would have reference of other accounts. Same way in the furniture, we cannot have reference in the particulars of furniture. So same name can never be written in the account we are actually posting in. Okay. So this was the second transaction. So let's go to the third transaction now. The third transaction says he purchased goods from Mohan on credit for 2000. So what did he do? Ram, the owner of the business, he purchased goods from Mohan on credit. So what would be the entry? How would we record it? Because we are practicing journalizing and then we are posting in this question. In the next question, we will straightway we would do posting directly. I want you to learn both practices, both methods of posting. One, we are doing direct posting. Another, we do with the help of entries first. So you may face any kind of question in exam, or you may come across any kind of situation in reality, right? So I'm saying let's record it first. So since we have purchased goods from Mohan, right, on credit. So this is the third transaction I am referring. So we would be recording it like this: purchases account debit to Mohan, because Mohan has given us goods. So debit the receiver and credit the giver. So here Mohan is giver. So Mohan would be credited, and debit what comes in. Purchases is actually inventory. It is referring to stock or inventory. So debit what comes in, because a real thing is coming in. So by following the rule of real thing, we would be debiting purchases and we would be crediting the person who has given us, because this was a purchase on credit. So we need to have the name of the person. So Mohan would be credited. Right? So transaction recorded is purchases debit to Mohan credited. So what do we need to do in posting? That is the next question. I need to have purchases account because it has not been opened yet ever, and I also need to have Mohan's account which has not been opened yet. So I need to open 2 new accounts in my ledger book, right? So hope you are able to understand this part. Now the second thing is, if I open purchases account, the purchases account has been debited in the journal entry. So which means the purchases account when we open in the ledger book would also be debited with 4,000 amount, but the reference would be of credit side, which is Mohan here. And when I open the Mohan account would be credited by 4,000, but the reference would be of debit side, which was purchases here. Alright. So I hope you could understand this, and now you can have a look at purchases account in front of you. So title, as I said, would remain the same which we had in the journal book. So purchases account would be title. In the amount column, if the purchases were of 2,000, so it could be any amount, 4 or 2, so it was 2,000. So purchases would be 2,000. Reference would be of credit side, which was Mohan, because Mohan sold us, we purchased from Mohan. And the second account, we will be opening up Mohan's account, and here the purchases would be credited, right, because purchases debit to Mohan. So it means Mohan's account was to be credited by 2,000. So we have 2,000 in the credit side of Mohan's account with the same name we opened, but reference is of debit side where purchases were debited, right? So this is how we do debit and credit. We will take up one more transaction here. The fourth one in this example, it says he paid cash to Mohan 1,000. So he means Ram. Ram paid cash of 1,000 to Mohan. The last transaction here I am referring to, right? So he paid cash. So what would be that journal entry for this transaction? Entry would be debit the receiver and credit the giver. Who is receiving? Mohan. So Mohan would be debited, and then what would we credit? We would credit cash, because cash is a real thing. It's going out of the business. So we would say Mohan account debit to cash. So cash credit, right? Or credit cash. So this is how we would record the transaction. If you refer to fourth number, so as per my discussion, Mohan's account is debited and cash account has been credited. Okay, so let's have a look that we need to have this Mohan's account and cash account. So in Mohan's accounts, we paid to Mohan. So we need to debit Mohan's account. So here it has been debited, cash has been given in the description because cash was credited. So debit, Mohan's account has been debited 1000, and then the reference has been given of the opposite side which was cash. Cash was credited, right? So we credited cash, and that's how this transaction, one part has been completed. Now we would go to cash account. So here's the cash account in front of you, and here cash account has been credited. Why? Because in our transaction we credited, while recording we credited cash. So we set Mohan's account debit because Mohan was the receiver, and we set cash account credited. So that's why cash account would be credited here, but the reference would be given of the debit side, which was Mohan account here. So we would give the reference of Mohan, and we would credit the cash account, which we did it. So this is how we completed all the transaction. Now we can balance this account. Balancing would be discussed in the next lecture. So I'm keeping the balancing part for future discussion. I would be rather switching to the next question now to take another example, so that you could actually learn posting very well. So here's another example in front of you. It says Ram started business with the capital of 10,000. So I would not be discussing, because I'm expanding the same question which we did in the last instant. The second transaction says he purchased goods from Mohan on credit for 2,000. The third transaction says he paid cash to Mohan for 1,000 rupees. And then fourth transaction is different. It says he sold goods to Suresh rupees 2,000. The another transaction says he received cash from Suresh rupees 3,000. This is the fifth transaction I am reading out. So the sixth transaction says he further purchased goods from Mohan's rupees 2,000. He paid cash to Mohan 1,000. He further sold goods to Suresh for 2,000, and he received cash from Suresh for 1,000. So in all there are 9 transactions in this second example, out of which 3 are common, which we discussed already. So I would be excluding these 3 transactions, and I would switch to the fourth transaction straight away, because considering the paucity of the time. And another thing which we would like to do now is this: we would be recording transaction by discussing only. We would not be recording in the journal book on slide, and I would be showing you posting directly in the ledger book. It means you need to be with me while I am discussing anything, so that you could catch the discussion and see how the transaction is directly posted in different accounts opened up in the ledger book. Okay, so let's take up the fourth one, because 3 have already been discussed and they would be part of the account, but our account's size would go bigger now. So the fourth transaction says he means Ram, sold goods to Suresh. So Suresh's account is new, it has not been opened earlier. So what is going to happen? He sold goods to Suresh. So when we have such statement, it means we have to assume that he sold on credit. He did not sell on cash. This is the first thing. So what is happening? Our goods are going out of the business, and who is receiving? Suresh is receiving. So we need to open up Suresh account. So let's have a look. Here is Suresh account. So Suresh account debit the receiver and credit the giver. So Suresh has been debited, and then we would use the word sales. So have a look at the slide. It says Suresh account, because title has to have the same name. So we have the Suresh account as a title. Then the sales has been written in the debit. So 2,000 worth goods were sold to Suresh. So Suresh debit to sales. So sales has been written in the particulars because they were in the credit side. So Suresh account has been debited by 2,000, and reference has been given of the opposite side, and the opposite side is sales here. So that's how 2,000 has been written in the particulars in the amount and in the particular sales what has been written, right? And the same amount would go to a sales account. It means I need to open up another account, sales account, which has never been there before in the past example. So here is the sales account. So here I write Suresh. So Suresh, so date should be there to differentiate. I have purposefully just ignored dates because considering the paucity of time. So Suresh account has been credited and the reference has been given. Sales account has been credited and the reference has been given of Suresh. And in the previous example, the Suresh account was debited. So 2000 has been put on the debit side, same 2000 has been put on the credit side of the another account. So this transaction has been completed from both debit and credit aspect, right? So now let's take this another example, and I think this would be the last example we could take. He received cash from Suresh, number 5, rupees 3000. So cash is coming in. Let's discuss it quickly. So cash is coming in, and who is paying us? Suresh, right? So it means this transaction will go to cash account as well as it will go to Suresh account. So to discuss, it would be cash debit because cash is a real thing coming in the business. So we would debit cash account, and in the credit side we would have Suresh because debit the receiver and credit the giver. And Suresh being a person paying us, so he would be credited. So that's how we record the transaction. When it comes to posting, I need to post it in two accounts, cash account as well as Suresh account. So I need to have Suresh account if it is not opened before, and the same amount would go to cash account which has already been opened. So let's have a look at the cash account. It says cash account would be debited, 3000 was received. So we have debited cash account. So cash account was already there and reference is given of the Suresh. So amount goes on the debit side and reference is given of the side which was credited, and Suresh account was credited, and this amount goes to Suresh account, right? Here this 3000 goes on the credit side. As I said, whatever has been credited, Suresh account was credited, so he would be credited in posting as well, but reference would be given of the debit side, and debit side was cash. So that's how we complete posting, and we have taken couple of examples, and I hope you were able to understand how the posting is done. Just follow my rule which I shared, that debit whatever has been debited, same account should be debited. So we cannot have the name of the account written in the particulars. Don't get confused. I've seen people making this mistake, this error. When they are posting, if I'm opening up capital account, since capital account was there in the recording part, they will simply write the capital account in the particulars of the capital account itself, which actually is not correct at all. It is 100% incorrect. So always remember that the account which has been opened in the book would have reference of the opposite side. If we are writing the amount in the debit side, the reference in the particulars would have of the credit side. If we are writing in the credit side, the reference in the particulars would have of the debit side. Just follow this instruction and I'm sure you will not be able you will not face any problem in solving the problems. Thank you.
With this note, thank you, ma'am. Thank you so very much for giving us a very insightful lecture. And friends, we believe that if you have any queries, do write to us at info.cec@nic.in. We will be meeting again soon. Till then, take care. Goodbye. Thank you, ma'am. Thank you.
Thank you, Gitika, and thank you, viewers.